Secretary of Branch, CA Anirban Paul, and past chairman, and today's and respectable and honorable speakers, resource persons, Sri Abhay Desai sir, and my senior professionals, and past chairman and MC members, and my professional colleagues, I welcome you all and a very good evening today. Because we have started this 1 week program, because so far we are conducting the webinars on GST, supply or input tax credit, etc. But now we start after this, because this is after coming into force in 2017, more than 5 years is over. Now, up to assessment, we have not started. The assessment and audit part and other legal matters, legal course. So we have not started this program. So this legal SAPTAH consists of 1 week 1 week webinars, and starting from the assessment and audit and demand and recovery 1 day, and insights of the inspection section stages, and these advanced rulings and section 95 and 106, and like that Friday this appeals revision section 101, 107 to 121, and 28th Saturday offences and penalties section 122 to 128. Because the week-long program webinars consist of these legal proceedings, which are important now, because many members have requested this audit, after audit procedures. So that's why we have taken this program. I welcome you all once again to this week-long program. Because as you all know that assessments means there are different assessments are there. Provisional assessment is there, and summary assessment is there, and scrutiny of the returns filed by the registered persons and determination of the tax liability. Assessment of the registered taxable person, we have filed to file the tax returns. Assessment of unregistered persons. So many assessments are there. So all these assessments will be discussed thoroughly by our Abhay Desai sir. Like that, audit also there, audit by tax authorities and special audits. Because the detailed discussions we have not taken so far. So today, our Abhay Desai sir discuss thoroughly on the assessments and audit procedures, and this impact on the offences, impact on the registered persons and unregistered persons. So with this, now I request our Andor Sridharu so to introduce the chief today's resource persons, Sri Abhay Desai sir.
Good evening, members. It's my privilege to introduce the honorable speaker of today's session, CA Abhay Desai, CA LL. He is meritorious from his academics. He has an academic background and secured all India ranks at CA examinations. He started his career as immediately after the qualification as a partner with Messrs. Ignesh Desai and Co. as a partner. He is specialized in the field of taxation and rendering advisory services as well as litigation up to the Honorable Supreme Court level and to various business entities across India. He is an expert in handling complex issues in GST. He also has rich experience representing clients across various authorities, including the tribunal. He has to his credit several reported judgments in the field of indirect taxation. He has a deep understanding of not
Sridhar garu ఏమైంది?
Am I audible, sir?
Yeah, you are audible. Sir, you unmute yourself, sir. Sridhar. Sridhar.
Actually.
Sridhar.
Sir,
Yeah.
unmute on.
Unmute. Unmute, sir.
Yeah.
You are already in the muted. Unmute చేయండి ఒకసారి.
I think we can start the session.
Yeah. Available, sir? Hello?
You are audible, sir.
Am I audible? Yeah. He has rich experience in representing clients across other teams. He has he has deep understanding of not only tax laws but the business dynamics and issues of the clients business balancing and the clients in the best manner. He has also authored several books. His book on the SAPTAH, which was dispute resolution in 2019, has been published to the prestigious Chamber of Tax Consultants Mumbai.
Sir, some net problem is there. You please leave it, sir. Sir, Sridhar.
Yeah, sorry, I have got some technical glitches. I don't know today it is happening. He is also one of the contributors to the ICA publication on GST annual return and audits. He has also authored and edited several books published by ICA. He has been adopted as corporate member of the Indirect of ICA for 2019 and 2022. He is also of the Indirect of the Chamber of Tax Consultants Mumbai. He has more than 100 seminars on indirect taxation.
Sridhar garu disconnect అయిపోతుంది, sir.
I think it's fine in the interest of time.
Sir, Sridhar, please stop that. He has made representation before the Honorable Finance Minister of India as well as the Honorable Deputy Finance Minister of India on various issues on indirect taxation. He has addressed more than 500 seminars on indirect taxation on date. So he has presented papers as the prestigious RRCs organized by the Bombay Chartered Accountants Society. He has also presented papers at several national as well as regional conferences across India. He has also addressed several trade bodies such as FICCI as well as the Chamber of Commerce of several states and cities. He has published more than 500 articles in leading journals on taxation in India. His treatise on recovery and attachment proceedings under GVAT law has been published in the International Research Journal of the Management and Commerce, published by the Associated Asian Research Foundation. He is the winner of the All India Gujarat Elocution Competition held by the Bar Association. He has also been awarded as the best column paper writer by the Gujarat Sales Tax Bar Association as well as the Goods and Services Tax Practitioners Association of Maharashtra. He can be contacted because he is available to all the people because he is very, very soft and a gentleman and he wants to clarify all the doubts of all the people. Whenever anybody approaches him or by reaching by mail also, he will clarify all the doubts. Really, he is the expert on this GST. Really, we are very fortunate. These Visakhapatnam people are very fortunate enough to get him on this for this seminar. Really, is very kind enough in spite of his busy schedule. He has given this his time, valuable time to us. Really, Abhay Desai sir, we welcome you with these few words for this August gathering. Now you can address, sir.
Thank you. So very warm good evening to all the members, respected chairman sir, of the Visakhapatnam branch, the past chairman, the managing council members of the branch, seniors of the profession and friends. It is indeed a pleasure. In fact, I would have loved to come there physically, perhaps virtually. We don't get that feeling of warmth as opposed to what we generally experience when we see each other face to face. However, the warmth expressed by the chairman is indeed heartening. In fact, even on a virtual platform, he has been kind enough to allow me to share some of my thoughts on the topic. As he rightly put, I believe time has now come for every one of us to really appreciate the provisions related to assessment and audit. I don't see any chartered accountant not practicing in the area of GST, because since 2017, GST, which has been implemented in our country, has basically broadened the scope. Almost any client that you might be dealing with, that you might be coming in contact with, would have certain issues in GST. In fact, till now, what I see has happened is that people have given their exams, but the examiner has not yet arrived. Now the examiner is going to enter the area. He will start the audits. He will start checking the papers that the taxpayers have written over a period of last more than 4 years. And really some interesting issues will come up. Here also, in my opinion, every client is going to really face the department issues. Although a client may be from a small industry, a medium industry, or a large industry, whatever be the case, he will definitely have certain issues in GST, for which he will require a professional help. And I see, as a chartered accountants, we shall be playing a much bigger role, a much larger role as we move ahead in this arena. I mean, in fact, why I'm saying that as a chartered accountant, we shall be playing a larger role is because of the mindset. In fact, I'm reminded of a very, very good anecdote that I read a few days back. In fact, it happened once that there was a strong bodybuilder. He claimed to have the greatest strength in the country. So he once visited a restaurant. There he ordered his food. Along with the food, of course, as you are aware, the restaurants serve onions and cut lemons. So he took one slice of the lemon. He squeezed it so hard that almost all the juice in that lemon came out. He was so strong that he claimed that after he has squeezed this lemon, no further, even a drop of juice would remain in that squeezed slice. And therefore, if anyone sitting in that restaurant, if anyone can really squeeze this further, and if he can pull even one drop of lemon out of that slice, then he would pay 5,000 rupees to that person. So that was the bet that he put in the restaurant. So he squeezed the slice of lemon so hard that virtually it was not possible for any other person to really squeeze it more and extract more lemon juice out of it. But one person got up from the table. He came to that bodybuilder and he squeezed the lemon, and not just one drop, he could put out 3 drops from that already squeezed slice. So that bodybuilder was amazed. In fact, he thought no one would really be able to do it. So he asked that person that in which gymnasium does he go, because he was a very feeble looking guy and not strong enough as compared to the bodybuilder. So he was very curious that how come you have so much strength that even after I have squeezed the lemon, still after that you were able to squeeze it and extract 3 more droplets from it. So that officer said that I don't go to any gymnasium, but I am a GST officer. So this is the fate. Every GST officer has the ability to squeeze the lemon, even after extracting whatever juice is already squeezed from that slice. And therefore, because of this mindset, we will certainly see lots of litigation, lots of disputes coming around in GST. And therefore, as a practicing chartered accountant or a chartered accountant in industry, it is very important to understand what are the legal provisions concerning assessments and audit. What I firmly believe is that any case that you make before the department, if the foundation of that case, if the foundation of that particular matter is strong, then there is a very high probability that that particular client will succeed if that case travels to the appellate forum. The audit and the assessment is the first opportunity where, as a taxpayer and as a tax practitioner, we get the ability to lay down the foundation for any particular dispute. If we are careful enough to analyze the dispute, if we are careful enough to present the case favorably at the lower stage, we are not assured that the officer will accept your arguments, the officer will accept your facts. But all those efforts that you are going to put in at a lower stage before the departmental audit authorities will certainly help you a lot once those cases get traveled to the appellate forum, because as you are all aware, the show cause notice in an indirect tax law, including the GST law, is the foundation for any proceeding. So once you have put all your arguments and all your facts, and once you have built a strong foundation, you will see a very high probability of you succeeding as the case travels further. So with that, let me just put the presentation. Now, today's session deals with the concept of assessment and audit under GST. So what I intend to cover is, before dealing with the subject proper, we need to understand the scheme of the act as regards the entire proceeding of collection and recovery of tax, because that is fundamental to our understanding. Then we go to the topic of assessment. As Chairman Sir was saying, there are different types of assessments that have been envisaged under the GST law. We will see what are those assessments and what are the rights of the taxpayers, what are the rights of the department. Then we will go to the second topic, that is audit by the tax authorities. Again, something that has already started. In fact, CGST, the central GST and the state GST, both the authorities have started initiating those audits. So it's important to understand how they will conduct their audit, what are the issues that they will be looking at, how as a taxpayer you should respond to those issues, what are the rights that the law has given to a taxpayer vis-a-vis the departmental audits, and if there is any disagreement or if there is any difference with the tax authorities, what can be the proper course of action that one should consider while handling that particular issue. And last, we'll look at some important aspects related to the topic, and we understand that along with the issues related to the show cause notice and adjudication, because both are connected. I will not be dealing with all the issues related to show cause notice, because as I understand, there is a separate session altogether fixed for that topic. But I would be dealing only with certain issues related to the show cause notice, which emanate out of the issue of audits conducted by the department. Since both the issues are related, so I think it is better that as a participant, we understand the contours of that particular aspect. So with that, let me start. Now, normally as a professional, the first important principle that we must understand is this, that any tax, or for that matter, even interest or penalty, if the government wants to collect from a particular taxpayer, they can only do it by following the process of law. Now, may I request to mute? May I request if the participants may mute themselves so that, okay, yeah, thank you. So, as I was saying, one of the most fundamental principles that all of us must understand is this, that any collection, any recovery that the department wants to undertake from a taxpayer cannot happen on the whims and fancies of the department. It has to happen through a process given in law. If that process is not followed, if that process is breached, then that recovery is an illegal recovery. That recovery cannot be sustained. And therefore, in that situation, the taxpayer will not be liable to pay those dues. Now, why I'm saying this? I'm saying this because Article 265 contains this principle. What the article says of our constitution, it says no tax shall be levied or collected except by authority of law. So not only levy shall be as per the authority of law, but even the collection of that tax has to be as per the authority of law. So levy and collection, both are equally important. It is not just that the levy should be sustainable, but even the collection process should also be sustainable. If the collection process is not sustainable, then on that ground itself, the collection will fail. Now, friends, let me share some practical insights. We have been dealing with a lot of cases in the pre-GST era. And let me tell you, at times, focus on the process for collection of the tax and any lacuna that you may observe in that process can help you a lot in defending the case. Let me share one or two practical examples. In GST, let us take a situation where a show cause notice has been issued to you. Now the law mandates, if you see section 73 or 74, and if you read that section along with rule 142, you will find that the law mandates that a summary of that show cause notice is required to be given along with the show cause notice electronically in a form which is known as DRC-01. Now, this is a statutory requirement emanating from the law itself, that along with the show cause notice, a taxpayer should be served electronically, that is on the GSTN portal, a summary of that show cause notice in a form which is known as DRC-01. Now, let us say you come across a situation where a department has served a show cause notice, but they have failed in serving the summary of that show cause notice in a form DRC-01 electronically, that is on the portal. Now, if you observe this failure, then certainly you are well within your rights in taking a ground when you defend this particular show cause notice, is to say that the proceedings itself are not in accordance with the law, because the law wanted the department to issue electronically a summary of that show cause notice in DRC-01. And if that has not happened, then the entire proceedings are not valid and that entire proceedings are required to be set aside. In fact, this view already Madhya Pradesh High Court has taken. If you see the decision in the case of Akash Garg, the Madhya Pradesh High Court has already decided and held that if the summary of the show cause notice is not given electronically in form DRC-01, then that entire proceedings are not valid. The entire proceedings are required to be quashed. So this is a classic example where you find that the collection by the department has not been undertaken in accordance with the law. Collection has to be undertaken in accordance with the law. If the collection is done otherwise, then on that very ground itself, the proceedings are held to be not valid. Let me share another example. Now, as you understand, in law, in GST law, there is an important aspect of jurisdiction. If the person who is issuing the notice to you is not vested with the jurisdiction qua that particular matter, then in that context, the entire notice itself will fail only on that ground of jurisdiction. Now, you are all aware that there is section 6 in the GST Act, in the CGST Act as well as the State GST Act. What section 6 is that if on a particular issue, one department has already seized that issue and the proceedings have been initiated on that issue, the another department cannot initiate any new proceedings on that particular issue. So let us take a situation. Let us say you have already received one notice wherein the notice says that there is a discrepancy in the return under section 61. The input tax credit that you have availed and the input tax credit that is auto drafted in GSTR 2A, there is a mismatch, and on that mismatch you are asked to justify why that credit should still be allowed. So this is a proceeding that have already been initiated under section 61. Let us say you already received the notice. Let us say for financial year 17-18 and 18-19, you already issued that, you already received that notice and proceedings are going on. You have filed your reply, you have made your submissions, and those proceedings are yet to be concluded. Meanwhile, the department comes for audit, issues you a notice for undertaking the audit under section 65 and raises the same issue that has already been raised earlier by way of proceedings under section 61. Are you liable to entertain the query? Answer is clear, no. Section 6 gives you protection in terms of saying that once an issue has been already seized by one department, the same issue cannot be again seized by another department or officer of the same department by initiating altogether different proceedings. Now, why this provision has been made in law? Why section 6 has been formulated? Section 6 has been formulated to avoid multiple litigations on that same issue. Let us say already you have responded to a notice to an officer who has given you a notice based on discrepancy that he has observed while scrutinizing your return. Audit officer, which is from a different commissionerate, is now coming to you and asking the same question that you already addressed and stands concluded. If you keep on answering the same question to multiple authorities, the disputes would never end. On the same issue, the disputes would multiply. To avoid that situation, section 6 has been formulated in law to say that once an issue has been seized by one department, by one officer, the same issue cannot be seized by another officer or another department. Now, this is, if let us say, if this law is ignored, and if a show cause notice is issued to you on this issue that already has been seized in another proceeding in the past, then this is the defense that you can take, that this proceeding are lacking the jurisdiction because the law does not grant the jurisdiction to the second officer to issue the notice on an issue that has already been seized by the first officer. So again, this is a second example where the collection is not sought to be made in accordance with the law. So as we go ahead, we will see similar examples. But the limited point that I'm trying to draw from this discussion is this, that along with the merits of the case, please pay equal attention to the manner in which the demands are sought to be raised. If the manner in which the demands are sought to be raised is not in accordance with the law, there can be an issue of jurisdiction, there can be issue of time limitation, there can be issue vis-a-vis the manner in which the notices were required to be served. There can be issue with regard to the form in which the notices were required to be served. In GST law, you will find that for every proceeding, for every interaction that a taxpayer has with the department, there is a law, there is a provision, and there is a manner in which those provisions have to be, the powers given by those provisions have to be exercised. If the officers are not exercising the powers in accordance with those provisions, if they are not issuing the notices in the format in which it is required to be issued, if they are not issuing the notices in the manner in which they are required to be served, then in that situation, all those proceedings will be held to be invalid. And therefore, this important defense must be taken along with the merits of the case when you want to respond to the notices that you come upon, that you come across. So this is very important, friends. Please pay equal attention to collection process. If you find any defect in the manner in which the recovery is trying to be made, please bring it out on paper. Please make the submission, challenge that issue, keep that issue alive. At a lower authority, perhaps that authority may not appreciate your contention. But certainly once these issues travel to a proper authority, to a fair authority, to an unbiased judicial authority, in those forums, certainly those issues will be looked at. And if they find that there is a breach in the way in which the tax was sought to be collected, then on that very ground itself, you will succeed. You may not have to even go to the merits of your case. So this is something which is fundamental, I think, for the next 6 days. If this is the message that you consider and that you strictly apply in any advice that you give, certainly you will find that in 5 cases out of 10, the officers would not have adhered to the process given in law, and on that very ground itself, lots of demands would get annulled, would get cost. So let us see. So let us now move with that limited understanding. Now, what is the scheme of the act? The law envisages two kinds of dues. One are self-assessed dues, another are non-self-assessed dues. In case of self-assessed dues, direct recovery is permissible. Department is not required to undertake any assessment, undertake any audit, undertake any search, any inspection, or any summonses not to be issued. Straight away recovery is possible. In situations other than self-assessed dues, recovery will not be possible straight away. Department will have to initiate either assessment. We will see what kind of assessments department can initiate. Department can initiate audit. Post the audit, if they find any recovery is to be made, they will have to follow it up with the issuance of show cause notice, undertake the adjudication of the show cause notice, and only thereafter the recoveries are permissible. Even during search, during inspection, or by way of issuing summons, if they find any recovery is to be made, it cannot be made without issuing the show cause notice and without undertaking the adjudication of that show cause notice. This is basically, friends, the entire scheme of the Act. Now, what are the self-assessed dues? These are the dues that the taxpayer is himself admitting while filing his return under Section 39. So these are the dues that the taxpayer admits when he makes the filing under the GST law. However, these self-assessed dues will not include cases where you have not admitted the liability. So let us take a case where search has happened at your premises. You have given one declaration saying that I admit to this liability. Will it become a self-assessed liability? The answer is no. It will not become a self-assessed liability because it has not been declared in the returns that you have furnished in GST law. This is a liability that you might have admitted at that point in time during the search, but it does not become a self-assessed liability. So law on this point says that even in this situation where during search, if a taxpayer has paid some money and admitted some liabilities, still the department is required to issue a show cause notice, appropriate the money that the taxpayer has paid during search against the liability that they want to now recover by way of a show cause notice, and thereafter pass an order. And only in that situation that money that was paid during search can then be appropriated against the dues. In absence of that, any money that you pay during search will be considered as a deposit made by the taxpayer, and the taxpayer will be well within his rights to contest that issue by way of writing a letter to the department saying that what I paid during search was not the self-admitted tax. I am of the view that the claim that I have made is in accordance with law, and therefore please treat the amount that I have paid during search as a deposit, and therefore either issue a show cause notice because I want to contest the claim, or grant a refund of the deposit that I have paid because I am of the opinion that tax is not liable in that situation. If you write this kind of letter to the department, then department is compelled by law to issue a show cause notice, and then only they can appropriate that amount that you have paid vis-a-vis the liability. If the department does not issue a show cause notice, if the department does not undertake the adjudication, you are well within your rights to apply for the refund of that amount that you have paid during search, because that then partakes the character of a deposit. And therefore, within 2 years from the date of payment, you have the right to apply for that refund. So this is a situation where self-assessment is not undertaken. No direct recovery is possible. Show cause notice is must. Only thereafter recovery can be undertaken. Second is a situation where you declare the liability in GSTR 1 or 3B by mistake. That situation also is not the case of self-assessment. In fact, there is an instruction which is issued recently, instruction number 1 of 2022, where the board has recognized this fact that any declaration in GSTR 1 or 3B cannot tantamount to self-assessed liability. People can commit mistakes. Nobody is perfect. And therefore, the instruction recognizes that fact and says that if, let us say, some taxpayer has declared something in GSTR 1 incorrectly, he has not paid the tax in GSTR 3B, Department cannot make direct recovery of that amount. Department will have to issue a letter to that officer, ask a justification for that discrepancy. If the taxpayer is in a position to justify that he has made an error in GSTR1, and either he has corrected that error or he will correct that error when he files the next month GSTR1, in that situation, the officer, the instruction says, the officer should not make any direct recovery from that particular taxpayer. The officer should then drop any proceedings for that particular issue. So this is again a second case, second situation where the liability would not be considered as a self-assessed liability, and therefore no direct recovery will be permissible. Third is interest amount. Normally we understand that interest amount is always consequential. So if we admit some liability in the return, the interest consequences automatically follow. But this is, friends, not the case every time. There can be situations where you might have a valid justification to either not pay the interest or pay the interest of a lower amount than what is tried to be recovered from you. Let us take a situation where you are having adequate credit balances in your ledgers. So when you avail the wrong credit, you are having the balance. That balance you have continued till day. And today you are reversing that wrong credit. You are reversing it by way of filing a return under section 39. Can the officer demand interest on in this situation? The answer is no. Now a law has been amended under section 50 subsection 3 retrospectively, that is with effect from July 2017, which says that in the case of wrong availment of input tax credit, the interest liability will be attracted only when you have utilized that wrong credit. If you have not utilized that wrong credit, in that situation, there will be no interest liability. So again, this is a situation where interest cannot be said to be self-assessed. If the department still feels that interest is to be recovered, in that situation, department will have to issue a show cause notice to recover any interest. No direct recovery of interest will be permissible. And last situation is penalty. Of course, penalty can never be self-assessed. In fact, the law also, if you see section 75(12), does not say that penalty would be self-assessed and recovered directly. So in that situation, if the department wants to recover penalty, they can only do it by way of issuing a show cause notice. Without issuance of show cause notice, no penalty can be recovered directly. So these are the four situations where you can say that the liability is not self-assessed and therefore no direct recovery will be permissible. So in a situation where you are not admitting the liability, the only course of action that is open for the department is either to undertake an assessment or to issue a show cause notice, undertake the adjudication, pass an order, pass a demand order, and if the taxpayer is not going into an appeal, only in that situation, if the taxpayer still does not pay the liability as per the demand order, only in that situation, after a period of 90 days from the date of service of the demand order, recovery can be permissible. Before that date, recovery is not permissible. This proposition already has been settled. In number of cases, the Supreme Court has said that direct recovery is not permissible of any dues which has not been self-assessed by the taxpayer. So this is again a second proposition that you must understand, that if a client comes to you saying that I have paid this money, and thereafter you find that it was not payable at all, legally you find that that issue had the issue raised by the department has no merits. In that situation, unless that liability has been declared in a return that you have filed, any other way you have paid that liability, either during search or as a part of summon proceedings or by way of any letter that you have received from the department, in all those situations, you have a right to write a letter to the department saying that whatever I paid was only a deposit. Either you issue a show cause notice because you want to contest the demand, or refund that amount that I had paid earlier by way of a deposit. So this is again something that you must keep in mind. Third aspect that you must keep in mind is the entire concept of burden of proof. Now, law is well settled on this. In a fiscal law, the burden of proof as far as the levy of tax is concerned always lies with the department. Department has to first justify why they feel that levy is attracted and therefore the tax is to be recovered. Burden is not on the taxpayer. Only when the department discharges their burden, then the onus is on the taxpayer to justify why the tax is not payable. This is as far as the levy is concerned. However, when it comes to claim of exemption or the claim of input tax credit, in that situation, the law is reversed. The burden is on the assessee, burden is on the taxpayer. So taxpayer has to justify first why he is entitled for that exemption or why he is entitled for that input tax credit. The burden is not on the department first. Please understand this. So when you receive a notice on account of a mismatch in a case of an input tax credit claim, kindly not only reply by saying that your credit is legitimate, also give an evidence to say that your credit is legitimate. You produce the copy of invoices. You produce whatever proofs that you have to demonstrate that you have actually received the underlying goods or services. You produce the evidence to demonstrate that you have used those goods or you have made further supply of those goods. Please do that, because if you have done that, if you have discharged your burden that is casted on you as far as the claim of input tax credit is concerned, and if the department does not object to those facts, department merely says that your credit is not eligible because there is a mismatch with GSTR 2A. And once you have discharged your burden in terms of establishing the genuineness of a transaction, in that situation, certainly, if this case goes into the appellate forum, law, as I see, would be settled in the by way of saying that as far as genuine transactions are concerned, the credit cannot be denied on a mere mismatch with GSTR 2A. This is, I am saying, of a position prior to January 2022. As you all are aware, from 1st of January of 2022, a new clause has been added to section 16, subsection 2, which now mandates that unless the supplier has not furnished the data in their GSTR 1, you shall not be eligible for the credit. But that is a prospective amendment, does not apply to the period prior to 1st January 2022. And therefore, when you receive any kind of notice or during audit, if you come across a situation where credit is sought to be denied on mismatch, not only reply on the fact that mismatch is not the valid ground to deny the credit, but also discharge your burden under section 155 by producing all the evidences that you have to establish that the transaction is genuine. Once you have established that the transaction is genuine, in that situation, then the entire onus will be on the department to recover that amount from the supplier. You will not be penalized by way of asking the reversal of credit or recovery of credit from your account. So this is again something that fundamentally you have to understand. Similar issue is with exemption. If you have claimed any exemption, then during the departmental audit, please discharge your burden. Please satisfy, please submit whatever evidences that you have that demonstrate that you are eligible for that exemption. Once you have done so, and if that audit officer is not in agreement with that stand, he will have to then come out and say in his audit report that why, despite you producing all the evidences which discharges your burden, still on what ground he wants to deny the exemption. So once you have discharged your burden, then it will be tough, difficult for the officer to really find fault with that and deny the exemption and make any recovery under that particular situation. So therefore, please keep this third important aspect of today's discussion in mind, that as far as the claim of exemption and input tax credit is concerned, you have to discharge your burden first. Once you have discharged your burden, then the officer has to then say why still the exemption is not allowable or input tax credit is not allowable. However, when it comes to the levy of tax, department has to first discharge their burden. They cannot just say that you have received 100 rupees. I can see an income of 100 rupees in your P&L account. In your GSTR 3B, I see that only on 90 rupees you have discharged your tax. So on 10 rupees, I am asking you to pay the tax. that is not sufficient for the department to recover the tax on the 10 rupees. When it comes to levy, the department has to satisfy what was the transaction which was liable to tax, whether it was in the nature of supply, whether it was a taxable supply, whether it was a supply of goods or services, at what rate of tax the supply attracted. Only if the department has discharged this primary burden, then only that levy can be justified. Levy cannot be justified just on a mere difference that the department might observe when comparing your income reported in your P&L account with the turnover reported in your GST return or an annual return. So this is again the third fundamental aspect that you must keep in mind. Now coming to our topic of assessment. Now, before I deal with the type of assessment, some fundamental aspects have to be understood. Unlike the earlier VAT regime, in a value-added tax regime before GST, there was a concept of yearly assessment, where yearly you were called, records were examined, and an assessment order was passed. In GST law, the assessment provisions will be an exception. The normal course of action that the department would take to recover any dues from the taxpayer would be by way of issuing a show cause notice under either section 73 or 74, adjudicating that show cause notice by way of passing an order and making the recovery in pursuant to that order. This will be the default mode for the department to make any recovery. Only in exceptional situations, we will see what are those situations, and assessment can be undertaken. So the GST regime is completely different from the earlier VAT regime. There will not be mandatory assessment, yearly assessment. Assessments will happen only in some specific situations that we will see. In all other general situations, the recovery will be possible only by way of issuing a show cause notice and adjudicating that show cause notice. So the GST law, as far as these provisions are concerned, is fundamentally based on the central excise regime and not on the value-added tax regime. In a central excise regime, we had a similar provision where assessments were very limited in only exceptional situations. The default provision, the default mode for the department to make recoveries was by way of issuing a show cause notice and adjudicating that show cause notice. So the same principle applies even in GST law. There will not be any yearly assessments. There will not be any yearly assessment orders. Now, with this background, let us see what is an assessment in GST. So the law clause 11 of section 2 defines the term assessment. It defines it in a very broad manner. However, as I discussed, the assessment in GST law will happen in only specific situations. If your case does not fall in that situation, your case will not be taken for assessment. Only if the department observes any recovery, any liability, then the way in which the department will undertake the recovery will be by way of issuing a show cause notice under 73 or 74 and passing of the order under that particular law. Now, with this background, let us see the kinds of assessments that GST law has envisaged. First assessment that the GST law envisages is the provisional assessment. Now, this is basically, friends, not an assessment that department will undertake on their own. It is an assessment that taxpayer will ask from the department to undertake. So it is a situation where the taxpayer is not able to determine the value of the goods or services that he is supplying, or he is unable to determine the applicable tax rate. In any of these two situations, he can approach the department. He can ask the department to undertake the assessment. The assessment undertaken by the department in this situation would be a provisional assessment. The officer will pass a provisional assessment order. Thereafter, a final assessment order will be passed. If there is any difference, if provisionally, if let us say the taxpayer is asked to pay 100 rupees, if on a final assessment, if it appears that he was liable to pay 120, then on that additional 20 rupees, the taxpayer will have to pay interest for the delay that has happened in the payment of that tax. Conversely, if in a provisional order, if 100 is asked to be paid, and if at the time of final assessment, if 80 is found out, then 20 rupees would be refunded to that particular taxpayer if he has not passed the burden of that 20 rupees to any of their customers. So this is in brief the entire concept of provisional assessment. Is it suggested for any taxpayer to go for this? The clear answer is no. No taxpayer should go for this provisional assessment, because as you are all well aware, if you go to the department, certainly department would take the view which will be detrimental to the taxpayer. So taxpayer should voluntarily determine what is the value and what is the applicable rate of tax. Taxpayer should not resort to this provisional assessment, because if you resort to this provisional assessment and if it is ultimately held against you, you went to the department assuming that department will accept your value of 100. You went to the department expecting that they will accept your tax rate of 18%. However, the department comes back by saying instead of 100, you will have to pay 120. Instead of tax rate of 18%, you will have to pay tax at 28%. Then you will invite litigation from day one, because since that order will be binding on you, you will have to go into an appeal to challenge that order. And only if that order is set aside, only in that situation, you will come out from that liability. So that is why I would never suggest anyone that one should really undertake or approach the department by view of making a request for provisional assessment. Better to decide for yourself what is the correct value, what is the correct rate of tax, and accordingly on a self-assessment basis, continue to discharge the tax. This is something which is not advisable. Earlier, this provisional assessment, that is in the pre-GST era, this particular provision had the merits. Now in GST law, I do not find any merits in this particular provision. It is a facility given to the taxpayer, but the facility comes at a big cost, because if your assessment is not accepted by the department, you will invite the litigation immediately. And that is something that certainly no taxpayer would want, or no taxpayer should ideally go for. So this is all about section 60. Section 61 talks about scrutiny of the return. So this is a provision where it says that if the officer, while examining your return, finds certain discrepancy, in that situation, he can exercise the power under 61. He can issue a notice to you. There is a form given to you, given to that officer, in which he should communicate that notice, that is ASMT 10. I am sure a lot of participants today who are on a webinar would have received such notices for your clients. You have to respond to that notice in a form called ASMT 11. If the officer finds your reply to be satisfactory, in that situation, he will drop the proceedings. If the officer finds that your reply is not satisfactory, let us say you received an ASMT 10 indicating a discrepancy in your credit, when he compared your GSTR 3B credit with ITC reflected on the portal in 2A. Now you file a reply, you explain the reasons, but still he is not satisfied. He says no, still that difference is recoverable. Can he make the direct recovery? The answer is clear no. What the law says under section 61, that even after filing your reply, if he is not satisfied with your reply, he cannot make any direct recovery. He will still have to initiate a proceeding under section 73 or 74. He will have to issue a show cause notice. He will have to adjudicate that show cause notice. And only after that, unless you are not going to contest the matter by way of an appeal, only in that situation, the recovery can be undertaken. In absence of that, no recovery can be undertaken. So this is something which has to be understood, that as soon as you receive ASMT 10, don't be in the impression that this is the recovery. No, it is only a notice asking reasons for the discrepancy. Once you file your reasons in ASMT 11, don't be in the thought that if your reply is not accepted, department will tomorrow straight away recover that liability. No. Even if your reply is not accepted, still the law mandates that that officer has to still issue a show cause notice and adjudicate that show cause notice, and only thereafter the recovery is possible. So this is important. Why it is important? Because normally what I see, as soon as we receive ASMT 10, we always file our reply and we hope that if it is accepted. If it is not accepted, we fear that recovery will be happening immediately. No recovery can happen immediately. the notice will have to be followed by a show cause notice, and only after adjudication it can recovery is possible. Now, why I'm saying this is important, because in ASMT 10 they may indicate that difference with 2A is a valid ground to ask justification from you. But when they will draft a show cause notice, do you think the difference with 2A can be the valid ground to issue a show cause notice? The answer is clear, no. Why? Because in law, before January 2022, there is no provision in law which says that based on the difference with GSTR 2A, a credit claim can be denied. So when this particular officer will sit in his table to draft a show cause notice, he will have to quote a provision in law under which he wants to deny the credit. Now he will fail here because he will not find any provision in law which says that credit can be denied on a mismatch with GSTR 2A. So when you receive such notices in ASMT 10 under section 61, don't worry that if you don't reply, liability will be immediate. No liability will fall immediately. They will have to issue a show cause notice, and in a show cause notice, they have to allege. Friends, please understand, show cause notice is like a charge sheet in a civil law or in a criminal law. There is a concept known as charge sheet, which basically is a charge which is filed by the police against the accused, where the police lays down that what are the grounds on which they find that the accused has violated the provisions of law and therefore requires to be punished. Similarly, show cause notice is like a charge sheet. The officer has to refer to a particular law that the taxpayer has breached, that the taxpayer has not complied with. The officer has referred to the actual facts of the taxpayer, and only on that ground he can make an allegation against the taxpayer saying that this is the default that you have committed and therefore this is the amount that is liable to be recovered. If the officer fails in quoting the section of law that has been violated, if the officer fails in referring to the facts of the case, if he is issuing the notice based on any assumption or any presumption, or if the notice is issued without referring to any particular provision of law, just a general reference is made to a law, in that situation, those notices are going to fail because those notices lack the fundamental aspect of law that a show cause notice should allege the specific law that has been violated and the specific facts which demonstrate that violation. If that is not there in the show cause notice, then on that basis itself, the show cause notice cannot survive. And therefore, friends, please understand, even if you receive notice in 61, don't be of the impression that immediately recovery will happen. No, show cause notice will come. And if the show cause notice is vague, if the show cause notice is based on presumptions, then on that very ground itself, those notices will not survive. So kindly keep this aspect in mind at the time of responding to the notices that you receive in section 61. 62 talks about situations where assessments can happen of persons, registered persons who are not filing the return. So person who is registered in GST law, he has not filed the return. He has been issued a reminder under section 45 or section 39 that please file the return. Even after receiving the notice under section 46, within 30 days, if he files the return, then the proceedings will drop. If he is not filing the return, then the officer will initiate these proceedings under 62 to make the assessment of that person. Let us say an assessment has happened, which will be a base judgment assessment. Within 30 days of that assessment order, if the taxpayer files the return that was not filed earlier, in that situation, the law provides that that assessment will be withdrawn. No separate application is required. On its own, the assessment will be withdrawn as long as the taxpayer files the return that he had not filed, the pending returns, within 30 days of the service of the order. It is only if, let us say, he does not file the return within 30 days after the service of that order, in that situation, that order becomes a final order which is issued under 62. In that situation, the only remedy available to the taxpayer will be to challenge that order by way of filing an appeal against that order before the first appellate authority. So please, friends, please again here understand what is the important aspect, that if your client is receiving the notice to file the return, please file the return immediately. Don't wait for section 62 to get triggered. Let us say your client is careless, even after receiving the notices of not filing the returns, he does not still file the return. In that situation, after you receive the notice for making an assessment under section 62, please file the return at that stage. Even if you don't file the return at that stage, an assessment will happen. Officer will look at your past transactions, estimate your liability, and put an assessment of that. Within 30 days of that assessment order, without fail, file the return. If within that time, this is the third opportunity given to you. If by that time also, if you don't file the return, then you will have to file an appeal against that order. That order will not be withdrawn. If you filed the return within this timeline of 30 days from date of the order will be withdrawn. Now, why I am suggesting this? Because as you are all aware, there is a heavy pre-deposit, statutory pre-deposit that you will have to make if you don't set aside this order. Because let us say an order has been issued, it will be a base judgment order. If you don't file the return within 30 days of that order, therefore that order is confirmed. Therefore, now you will have to file an appeal only against that order. And at the time of filing an appeal, you will have to pay 10% of the tax dues as a pre-deposit for getting that appeal filed. To avoid that situation, please file the return so that that order gets set aside. Automatically, it gets withdrawn. And therefore, to that extent, you will save yourself from lot of misery. See, in GST law, one fundamental aspect to understand is, as long as you remain compliant with law, you will save a lot of misery. If you fail in complying, if you fail in filing the returns, unwarranted misery will get attracted, because department will then resort to these provisions, invoke the assessment, and unnecessarily trigger the litigation. The third kind of assessment that can happen is assessment of unregistered persons. Now, these are the persons who are not registered in GST law. So these are all our doctors, architects, interior designers. Many professionals in this country are still of the view that they are not required to register under GST. Take a case of doctors. Now, doctors could be earning lakhs of rupees from their medical practice. Now, that is an exempted supply. But along with that, he might also be earning certain commercial rent. He might have invested his money in some commercial property. He might be deriving some rental income out of that. Put together all his income, the income from medical practice, the income from commercial rent, he is crossing the threshold of 20 lakhs. Still, he is not registered in GST law. Why? Because he feels that since his commercial rent income is less than 20 lakhs, he is not liable to register. But that is a fallacy. In service tax law, the threshold exemptions of 10 lakhs were qua the taxable service value. In GST law, the threshold exemptions of 20 lakhs is not qua the taxable value. It is qua the aggregate turnover, which will include your exempt supply also. So these are the persons who are covered under 63. These are the persons who are not registered in GST law, but who are required to register in GST law. If the department finds across such category of persons, they will undertake an assessment of them as unregistered persons. In this situation, once the assessment is undertaken, please understand there is no way you can set aside that assessment. In the earlier provision we saw, since it was an assessment of a registered taxpayer, already registered with GST department, therefore, a right was given to him that he can file the return within 30 days from the date of service of assessment order, and he can get that assessment order withdrawn. In this situation, since this person was never registered in GST, that option of withdrawal of assessment order is not given. Only remedy available to that person, if an assessment is undertaken as an unregistered person, would be to file an appeal against that assessment order. Timeline is 5 years from the date of the filing of the annual return under section 44. So for 17-18, since the due date of filing of annual return was extended to January 2019, so for 17-18, if any assessment has to be undertaken, the due date would be considered 5 years from the date of the due date of the annual return and not the end of that concerned financial year. So by that, basically the department will get more time to apply this period of 5 years because it starts from the due date of annual return and not the end of the concerned financial year. Now this is 64. What is this provision? This is called as protective assessment. It is a summary assessment. Basically, this is a situation where the officer is of the opinion that by the time the department undertakes the regular scrutiny, the regular issuance of show cause notice and the adjudication of that show cause notice, by this time, if the taxpayer is going to undertake any activity that will basically lead to a situation where it will adversely affect the revenue. For example, if the officer is having an evidence which suggests that the taxpayer is going to basically leave the country, if the taxpayer is going to disappear, if the taxpayer is going to sell off his assets, till the time the show cause or adjudication is undertaken, in such situation, he can undertake which is called as a protective assessment. Here also, please understand, friends, fundamental condition is that the officer should have sufficient grounds to believe. This power cannot be exercised based on suspicion. Officer cannot say that I have a suspicion that the taxpayer will sell his assets and therefore I am undertaking this protective assessment under 64. That will not sustain because the law does not allow the officer to undertake this assessment merely on suspicion. The officer should have sufficient grounds to believe based on a cogent evidence. Only in that situation, this power can be exercised. Also, this power can be exercised only with the prior approval of a senior officer of the rank of additional commissioner or joint commissioner. So these are the two important aspects, two important limitations put in law. A previous sanction of superior officer is required and the exercise of this power should be based on a cogent material, not based on any assumption, not based on any presumption. So this is again 64. Let us say if the order is passed, the only remedy then in that situation for the taxpayer would be to go into an appeal and challenge the findings of that order. Whether there is a reassessment or revision in GST law, there is no concept of reassessment in GST law. There is a concept of revision in GST law. Section 108 talks about revision. There are certain limitations as to what orders can be revised. There is a time limit of 3 years within which the revision has to be exercised. So limited power of revision is given by law, but no power of reassessment is given by law. So in all those situations that we saw, once an assessment has happened, the remedy for the taxpayer would be to challenge that assessment order by way of filing an appeal. If the department finds that any error has happened in that assessment, then the remedy for the department would be to undertake the revision if Section 108 permits the department to do so under certain situations. So this ends the topic of assessment. As you would have understood from now, from the discussion till now, that assessment under GST law is totally different from earlier regime. Only in certain specific situations, assessments can be undertaken if the taxpayer has been compliant in a sense that he has been filing the returns. In that situation, assessment will never be undertaken in GST law. Only audits will be undertaken by the department, whereby if the department finds that there is certain discrepancy, there is certain non-payment of tax, or there is some wrong availment of credit, in that situation, the department will have to initiate proceedings under 73 or 74 and issue a show cause notice and adjudicate that show cause notice. So this is the fundamental design of the GST law. Now let us see the provisions related to the departmental audits. Now the term audit has been defined. Why it has been defined in the GST law? Now there is a very interesting history to it. In a brief manner, I will explain. We had a similar provision of audit under the earlier law. Now in the context of service tax, what happened was that by way of a rule was formulated under the power given by the Finance Act 94 to say that the officer would have a right to access the premises of the taxpayer and scrutinize the records that are available with that particular taxpayer. That was Rule 5 capital A of the Service Tax Rules. Now, Delhi High Court took a view in the case of Travelite that this rule is not sustainable because in the law, there is no power to undertake any audit of the taxpayer. And in absence of any power given by the Act to undertake the audit, by way of a delegated legislation, there can be no scrutiny or no verification possible. Now, to override that decision, the law was amended. Section 94(2) of Finance Act 94 was amended, whereby additional provision was put to say that the Act will grant the power to the executive. That is, the Parliament is now granting the power to the executive to verify the records of the taxpayer. So by doing this under amendment, the department wanted to justify that now look, in the Act, Parliament has authorized us to verify. We have formulated this Rule 5A, which allows us to scrutinize the records, and therefore the audit undertaken by us is valid. After this amendment, again, a petition was filed in the Delhi High Court in the case of mega cabs, where what was contended was this, that look, even after the amendment in the Act, the amendment is giving you only limited power to undertake verification. The term audit is of a larger scope than the term verification. And therefore, even after this amendment in the Act, no audit can be undertaken. Delhi High Court accepted this contention and held that yes, the term verification and audit are different. The law only permits verification, law does not permit audit, and therefore the audit undertaken by the Service Tax Department would be illegal. Now, both these matters, the Travelite case and the mega cab case, is pending before the Supreme Court. Now, given this confused history of service tax audits, this time in GST, the legislators thought it wise to put the audit provisions in the Act itself, not to put it by way of a delegated legislation in terms of allowing the executive to frame the rules for that. And legislator also thought it wise to define the audit in the law itself, so that this dispute, what we saw in the service tax era, does not again arise in the GST era. So this is the background why the law defines the term audit and why the law contains the provisions related to the audit. Now let us see how the law defines the term audit. So clause 13 defines what is the audit. It is a very definition. It says every examination, any examination of records, returns or other documents which are by the taxpayer to verify correct over the taxes paid, the refunds claimed, the credit availed, and to assess his compliance with the provisions of the Act or the rules is what is defined as an audit. So it's a very broad definition. It basically permits the department to undertake the thorough scrutiny of your records with the objective to assess the compliance with the law. So now that limitation, what was there in the service tax era, does not now no longer remain valid. The law itself defines audit in a very broad scope. So during the departmental audit, you cannot say to the taxpayer, to the department, that you cannot verify this or you cannot verify that. As long as that issue deals with the GST law, the officer will be well within his rights to ask questions on that, to ask records or justifications on that particular aspect. Now let us say how law has made the provisions related to departmental audits. So section 65 of the CGST Act contains the provisions related to the audit. What it says, subsection 1, the commissioner or any officer authorized by him by way of a general or specific order can undertake the audit. So either the commissioner can himself undertake the audit, or he can authorize any officer who is subordinate to him to undertake the audit. Now, if you see the entire administration of GST law, how it has been designed, this is again very fundamental to understand the entire issue of jurisdiction. See, in GST law, after finance ministry comes the board. board is vested with several powers in terms of issuing the circulars, in terms of suggesting, in terms of administering the entire GST department. After the board comes the chief commissioners, principal commissioners, which are again subordinate to the board, but they are above, superior to the jurisdictional commissionerate office. So these are the persons who are vested with the supervisory role on an overall basis. They are not vested with the role to execute any activity or execute any task under GST law. They are only vested with the authority to supervise the administration of the GST. Then comes our chief commissioner, principal commissioner, and all other officers subordinate to those commissioners, that is additional commissioner, assistant commissioner, deputy commissioner, superintendent, inspector. These are all the officers who are basically based at the local jurisdiction. They are the officers who are vested with the executive role, with the role of actually executing the provisions of the act in terms of undertaking the audits, in terms of issuing the summons, in terms of undertaking the adjudications, so on and so forth. So the audit can be executed only by a commissioner or an officer authorized by him. Persons above commissioner, that is the principal commissioner or the chief commissioner, cannot undertake the audit because those officers are not vested with the executive role. Those officers are vested with the supervisory role, and therefore the law has clearly made the distinction by allowing or authorizing the commissioner and the officers which are appointed or authorized by him to undertake this audit. Now, what shall be the frequency and the manner of audit? The law does not define exactly what shall be the frequency and the manner. It leaves it to the rules. So rule has been formulated, rule 101, which says that the manner in which you can conduct the audit is you will have to issue a notice to the taxpayer in a form known as ADT 1. Law also says that minimum 15 working days time has to be given to that taxpayer to prepare for the audit. So it is not the situation where today they issue the notice and tomorrow they can come for audit. 15 working days minimum are to be given to the taxpayer to prepare the data, prepare the records that are to be made available for the purpose of audit. Audit can be undertaken of the entire year, a part of the year, or multiple years. So it is not the situation where, let us say, tomorrow if the department initiates the audit, they have to do separate audits for separate years. It is not the situation. They can undertake the audit simultaneously of financial year, let us say 17, 18, 18, 19, 19, 20 together. They are not required to undertake audit year-wise. They can bunch the years, they can club the years and undertake the audit of those years in one go. What will happen if they do that? If they find any issue, then the show cause notice will also be issued for all these years together. So it is not the situation where, let us say, they undertake audit for 3 years together. If they find certain issue, then you will get only single show cause notice for that issue where the demand is for those 3 years. You will not get 3 separate show cause notices. And that is in a way administratively convenient also, because instead of challenging 3 separate notices, the matter would be limited to 1 notice covering the period of 3 years. So that way, for a taxpayer also, it will be administratively convenient. For the department also, it is administratively convenient. Where can audit be undertaken? Audit can be undertaken either by the department at their premises, or it can also be undertaken at the premises of the taxpayer. Law permits both ways audit can be undertaken. Now, what shall be the timeline for completing the audit? The law says the audit shall be completed within 3 months from the date of commencement. Now, how they have defined the date of commencement? The law says either the date on which you give all the records that they are asking, or the date on which they actually visit your premises, whichever is later. So that is the time from where this 3 months calculation would start. So let us say today you receive the notice, you give all the documents tomorrow. If, let us say, they do not want to come for physical visit, if they want to undertake the audit in their premises itself, in their offices itself. In that situation, the 3 months time limit would start from tomorrow. That is the time from which you have submitted them all the requisite information. If let us say after 1 month they decide to come to your office, to your premises and undertake the verification, in that situation, the 3 months time limit would start from that date of visit and not the date of initial submission of your records. So this is basically the law. Now, what happens if the audit is concluded? The law mandates, this is very important, friends. Law mandates that the findings of that audit are required to be communicated to the taxpayer within 30 days from the date of the conclusion of the audit. Now, why these findings are important? These are important for multiple reasons. One is to understand the stand of the department on the issues that they have identified during their audit. See, friends, practically, when the audit is going on, lot of things are discussed verbally. Nothing in concrete form is basically laid down by the department as to why they want to deny your claim or why they want to recover some liability. Audit report is the first instance, is the first stage where the department concretely tells you why they want to recover some liability or why they think that you have not paid the tax or you have claimed the wrong credit. Now, why this is important, friends? Because this will tell you the grounds on which department is going to issue the show cause notice in future. See, today, when the audit is going on and if they identify certain issue, don't be in a hurry to pay that liability immediately and settle it. If you find that the issues are debatable, wait for the audit report to come. Because in the audit report, you will know what are the bases on which the department is asking you to pay that money. If you find that the basis taken by the department is fundamentally flawed, if the basis taken by the department is not supported by law, then at that stage, you will be in a position to contest that issue further. If during the audit, if you agree to some liability, since discussions are all oral, they are all happening verbally, nothing is there on record, you will not be able to really know the mind of that officer as to why he is of the opinion that this liability is payable or this amount is due. Once an audit findings are given to you, you will know on what ground they are saying you are liable. If you study those grounds carefully, I believe in 5 out of 10 cases, you will find that their basis itself is wrong. So this will give you a good data or good information to decide whether you want to contest or you want to settle. See, paying liability at the time of audit or paying liability after receiving the audit report will not make any significant difference to your liability. Why I am saying that? Because the option given under section 74 to pay the tax liability along with interest and 15% penalty before the issuance of show cause notice to settle the case will be available even after you receive the audit findings. But what is the difference? The difference is this, that based on audit findings, you can then make up your mind whether you want to settle the case, exercise that option of paying the 15% penalty and close the matter, or to contest the matter by asking for a show cause notice. So that is the first advantage of the audit report. Second advantage of the audit report is, please understand, friends, penalty under section 74 can sustain only if the taxpayer has actively undertaken any action to evade the payment of tax. We have settled jurisprudence to say that section 74 can be attracted only if there is a suppression, there is fraud, there is misstatement, which is willful with an intent to evade. So there should be a positive action on the part of the taxpayer to evade the tax. Only in that situation, penalty can be justified. if let us say there is no intention, taxpayer may commit bona fide mistakes. It is possible that every taxpayer can commit certain mistakes, but it is not that those mistakes are always with ill intent, with an intent to defraud, with an intent to evade. So if the audit findings which are coming to you does not allege evasion, it does not say, it only says this was a mistake that we identified during audit. It does not talk about the basis or an intent of the taxpayer willfully committing that mistake, willfully evading that payment. Then in that situation, the person who is going to issue a show cause notice cannot then travel to section 74 and say that what was not paid was with an intent to evade. This is very fundamental, friends, if you can appreciate this aspect, that audit findings are the basis for the department to allege that you acted willfully with an intent to evade. If the audit findings are not alleging that intent, then the officer who is going to issue a show cause notice based on that audit findings cannot then bring his subjective notion and allege an intention to evade when the audit officer who actually undertook the verification is not alleging evasion. So the officer who undertook the verification, if he is not saying that this was not paid because you willfully intended to evade, then the officer issuing a show cause notice cannot say that this was not paid on account of evasion. Now this is very important, friends, because this defense will help you avoid invocation of extended period under 74, because as you are all aware, under section 74, department get 5 years time to issue an order, vis-a-vis 73, where they get a normal limitation of 3 years. And you will also, and this will also help you in defending the penalty. So this is the second important advantage of audit findings. Third important advantage. Let us say for 17, 18, 18, 19, audit has already concluded. Certain issue was observed, you replied, you justified, and that issue was dropped. Now, that same issue, if let us say is sought to be again raised by a subsequent officer in a subsequent audit, he will be stopped from raising that point because that point already stood raised, stood deliberated, and concluded in favor of the taxpayer by view of the earlier audit report. There is a subtle law which says that if a fact has been already brought to the notice of the department, based on that fact, the department already has concluded that no liability exists on that fact, then the another officer in future cannot say that that fact was hidden from them or that fact was basically suppressed by that particular taxpayer. Taxpayer in fact had given that fact to the earlier audit officer. He has examined that fact. He has recorded his finding in that audit report that he has no issues with that claim. Then the subsequent audit officer cannot say that that fact was hidden and therefore he is right in imposing penalty or invoking the extended period of limitation. That cannot happen because that fact already stood in the knowledge of the department. That fact already was well within the information of the department. So this is the third important advantage of the audit report, that in future audit report, or let us say the same period, certain transaction you get invited by another department. You were registered with, let us say, state GST office. They concluded the audit. They did not find any issue with a certain transaction. That same transaction is now questioned subsequently by the central department, saying they have some information. Based on that, they find that that credit is not eligible. This audit report will save you, because in the audit report, if audit report will capture that you gave all the information that was asked, which included the information about the transaction in question. It was examined and no query was observed or no issue was observed on that transaction. In that situation, the another government, the central government, officer from that government cannot then initiate any proceeding on that issue which already stood examined by the audit of the state officer. This again, as I discussed earlier, section 6 of the law contains this protection where it says once an issue has been initiated by one officer, the same issue cannot be initiated by the another officer, either of the same department or of the other department. So audit report will help you defend this situation also, because take my word, a day will come when even after the audit by the State Department, if let us say you are falling within the State Department, you will be getting the notices from the Central Department on certain transactions, or you are audited by the Central Department, you will be getting the notices from the State Department for that same time period in respect of certain transactions. So in those situations, to avoid multiplicity of proceedings, if you have an audit report in hand, you will save a lot of unwarranted proceedings, unwarranted litigations on that same time period for that same activity. So this is the third important advantage of the audit report. So why I am discussing all this is to make all of us aware that please don't be in a hurry to conclude the audit and avoid taking the audit report. After concluding the audit, without fail, take the copy of audit report. It is your statutory right. Once you have taken that audit report, it will help you a lot in future when for that same time period, same transactions, different authorities or future authorities would again ask the question. So at that point in time, this audit report would be of your great help. Now during audit, let us say after audit, if audit report comes, you don't agree to their findings, in that situation, what happens? They will have to issue a show cause notice, adjudicate that show cause notice, and then only the recovery of any dues will be permissible. Now, how the audit will be undertaken? So we have these manuals that have been issued by certain authorities. So CBIC has issued their manual in 2019. There is a follow-up manual on the quality review of the audits in 2021. Certain states have also issued certain manuals, like Karnataka has issued their manual. Maharashtra has issued one circular stating how they want their officers to conduct their audit. Himachal Pradesh has adopted the CBIC, the central manual. So in future also, I believe every state will be coming out with their own manuals, guiding their officers how they should undertake their audits. Now, let us see some important features of the CBIC manual. So first important feature I already dealt with. There will be an executive audit commissionerate separately for in the CGST commissionerates who will be undertaking the audit of the taxpayers. How the units will be selected for the purpose of audit. Unlike the excise audit, where the selection was only based on turnover criteria, in GST, they have formulated number of different criteria on the basis of which the units would be selected for audit. So it will not be limited to only turnover. There is a risk assessment module that they have created in the system. That module will ultimately be picking the cases. There is a 20% option given to the local commissionerate to pick the taxpayers. So out of 100 taxpayers, 80 will be picked by the system. 20 would be picked by the local commissionerate based on the local risk factors. What will be the audit process? Let me tell you, friends, the CBIC manual is very exhaustive. I would suggest every one of you to read that manual. It has, in fact, been prepared in a very exhaustive sense. It contains so many questions that the officer should ask the taxpayer while conducting the audit. Please read that so that you will become aware about what is expected by the department when they will start their audit. And that will also allow you to prepare your documentation, to prepare your records, so that you are in a better position to respond to their audit requirements. Detailed annexures have been given in this manual, which gives different checklists which the department will be following or will be using as part of their audit exercise. Now, let me focus on some important aspects. Duration. This manual, again, these are all recommendatory aspects, not mandatory. So the board has fixed up certain durations within which they should complete the audits. In case of a small taxpayer, the board has directed that don't visit the taxpayers for undertaking their audits. Please undertake the audits of the taxpayers in the departmental office itself. Don't go to the taxpayers' premises to undertake those audits. But the same does not apply to medium and large taxpayers. Medium and large taxpayers, the department will have a right to even visit the premises of the taxpayer to undertake the audits. They have prepared the entire step-by-step process of how the audit is to be undertaken. First, a desk review will be undertaken. So preliminary information will have to be provided by the taxpayer. Based on the desk review, they will find out certain issues that they may want to examine. Then they will come with an audit. They will prepare an audit plan. Based on that audit plan, either they may call the data at their office, or they may undertake the visit to the taxpayer's premises to undertake the audit. Now, this is very important, ITC mismatch. Now, their audit manual itself suggests that if they find difference with GSTR 2A, they are not suggesting direct recovery. In fact, they are saying that it is the duty of that officer to write a letter to the jurisdictional officer of the supplier, seek a confirmation from that officer as to whether that particular supplier has paid the tax, and only in absence of that confirmation, he can proceed against the concerned taxpayer who has availed the credit. So this again, in fact, something very important that you should highlight whenever they ask you justification for the difference of credit with 2A, please highlight this para 5.5.4 of their own manual to them, saying that, sir, please write the letter to the jurisdictional officer of my suppliers. First, verify from their end whether they have paid the tax. Only in absence of their not paying the tax, doubting the genuineness of a transaction, then only you can come to me and ask the reasons for why this credit should be denied or why this credit should be allowed. So this is something which is very important, that this is your right. The manual is itself suggesting this is your right. So you must exercise this right whenever whenever this issue of mismatch is raised during their audits. These are the different annexures. As you can see, 14 different annexures have been prepared in the CBIC manual, very exhaustive, where different aspects have been considered. In fact, you will be surprised to know that even the annexure contains the situations where they want their officers to understand the notes to accounts that have been attached with the audited financial statements. So gone are those days where only preliminary data was checked. Now we are entering into an era where the officers are also getting smarter and smarter. Officers are also getting good quality manuals. For instance, the CBIC manual has been drafted in a very well manner. Because of the upgradation of the knowledge of the officer, because of the upgradation of the knowledge of the department, certainly, as you all understand, that if the examiner becomes more intelligent, the life of the student becomes more miserable, because the student has to prepare more to pass the exam, to get good marks in the exam. So similarly, here also, the knowledge of the examiner will be upgraded. In fact, the audit manuals already demonstrate that their knowledge is, department is trying hard, the board is trying hard to really upgrade their level of understanding, their knowledge. The kind of checklist that they have prepared, the kind of ratio analysis that they want the officers to undertake as part of their audit is exhaustive. I believe if they undertake this kind of analysis, every taxpayer will have to really get a good professional help to face this kind of audits, because any kind of wrong information or any kind of incorrect information, if it is furnished at this stage, it can become very critical, because based on this information, entire future proceedings of the department would rest. So again, something here where I believe a role of professionals will become extremely important in hand-holding the client. As soon as the client receives the notice for audit, I think as a professional, we can really play a very big role in first preparing the clients to get ready for that audit in terms of scrutinizing the records, gauging the preparedness of the data, preparedness of the reports, even during the audit, we can be of great help to the taxpayer in terms of guiding them as to what are the issues that are raised, how to respond to those issues. And even after the audit is concluded, based on that audit report, we can, as a professional, guide the client whether they should settle the case or whether they should go into litigation. So these are all the three important stages where, as a professional, we will be able to play immense role. And I think as we go ahead, and we are already seeing it practically, the kind of questions the department are putting are advancing. It is not now only simple questions that they are asking, and therefore, as a taxpayer, they should also be now prepare themselves to have more rigorous data, more rigorous record keeping at their end, more rigorous examination of tax position that they have taken, so that they are able to justify. And please understand, the kind of sources from which they are going to look at the data is not limited to just GST. If you see this 14 annexures to the CBIC manual, the board is asking the officer to not just look at GST information. They are asking the officers to look at the filings done under the income tax law. They are asking the officers to look at the filings done as part of the cost audit compliance. They are asking the officers to look at the filings done under the Companies Act, the note to accounts which are prepared under the accounting standards. So these are the kind of data that the manual is suggesting to the officers to look at, to find out GST liability, to find out GST defaults. So we also will have to gear ourselves for this. We cannot just limit ourselves to GST registers to advise the client. We will also have to expand our horizon in terms of looking at the filing done by the client across various authorities, to look as to whether, if in any filings that he is doing, whether there are any issues which has GST implications. A simple example, right now in this part of the country, in the Western India, the burning issue that is going on is on the issue of corporate guarantees. So let us say there is a holding company, a subsidiary has taken a loan from a financial institution. Against this loan, the holding company has given a financial corporate guarantee to the bank for the grant of that loan. Now, this is something which appears as a notes to accounts. If you see the notes to accounts of a financial statement, if a holding company has given a guarantee of a loan taken by the subsidiary, then that appears as a contingent liability, because that is contingent upon the default by the subsidiary. If the subsidiary defaults in paying that loan, then the corporate guarantee would be triggered and the holding company would become liable to pay that outstanding amount to the financial institution. Now, this data is being examined by the GST department to raise an issue under GST by saying that because a holding company has given a guarantee to the subsidiary company, there is a supply between these two legal entities which are related parties. And as you are aware, when a transaction happens between a related party, valuation is out of question. As soon as supply is identified, that supply attracts tax, even if you have charged any consideration or not. So this is the issue that they have raised merely on reading the notes to accounts of the taxpayers. Similarly, you will find in notes to accounts, a lot of other information is contained which has GST implications. Let me tell you another example. Let us say in one of the case, we came across a situation where in notes to accounts, he had mentioned about certain event, an extraordinary event that it had happened in their factory, where a lot of material was destroyed on account of fire. So there was a fire in a premises, accidental fire, and a lot of material got destroyed. This was part of the notes to accounts, which the statutory auditor had put. Now, when we went through that, we analyzed what could be the implications under the GST law, because as you understand, in GST law also, we have section 17(5), which talks about the situation where ITC shall not be eligible if the goods are destroyed. So then we had to examine whether this particular case falls within that restricted provision or not. So this is something that we came across only after reading the notes to accounts. Otherwise, by way of normal perusal of the registers, one would not come across such facts or such situations. And department is, in fact, if you see this manual, the board is in fact suggesting the department to go through this data. So as a professional, it is also our duty to also go through such information to identify the issues in GST and prepare our clients well in advance as to what will happen, how the departmental audit will look at that issue, and what should be your response to that particular issue. Now, with that, the last topic that I want to deal with very quickly is special audit. Now, we saw departmental audit. Special audit is something where department finds that they come across a situation where the case is so complex that they want a professional to be appointed to undertake the audit and tell to the department that what are the lacunas. So this is a special audit provision where the commissioner is given the power, not below the rank of assistant commissioner, that considering the complexity of the case, he can, with the prior approval of the commissioner, appoint a chartered accountant or a cost accountant who will be nominated to undertake the audit. So the commissioner would nominate the chartered accountant or a cost accountant. The person who is nominated, the professional who is nominated, is given a period of 90 days to submit the audit. Of course, he can ask for an extension if required for a period of further 90 days. Based on that audit report, the department would decide how to proceed against that particular taxpayer. The cost of that audit, the expenses for that audit will be borne by the commissioner. It will not be borne by the taxpayers. It is the department, the government, who would be paying the fees for that professional for the purpose of undertaking the special audit. Now, last 5 minutes, some important aspects that one has to understand why audit is important. Now, as I already discussed, audit is a foundation for any proceeding, and therefore, to avoid penalty, to avoid invocation of extended period, to ensure that you put your facts in a right perspective before department assuming something which is not the case, audit is the first chance, first opportunity for you to put those facts before the officer. And let me tell you practically, the facts that you put during the stage of audit are not that greatly scrutinized as compared to facts that you may put at a later stage in the proceeding. So if something you put across to the audit authorities, they may object to the claim, but the facts would be well received. And once that fact is well received, then the legal dispute that you want to then continue at a higher appellate forum, there is a greater probability that it will come in your favor, because at that stage, the facts would not be in dispute. Only what would be in dispute would be the law, would be the interpretation of that law. And therefore, in my opinion, audit is important for the very reason that this is the first opportunity for you to put your facts before the officer, to put your actual facts before the officer, so that you don't end up with unwarranted or factual issues getting merged with the legal issues. Let me end by one a small example, again practical example, to drive home why this entire topic is relevant before I close my talk. So recently, in one of the cases that we came across, there was, so the audit has been initiated by the department. When they initiated the audit, they went through the profit and loss account of this particular taxpayer, and they found that there was an income which was shown in that profit and loss account. The taxpayer had not paid the GST on that income. So they asked for the details, and the taxpayer said that this is basically the tooling cost. Now, what is the tooling cost? So normally in a manufacturing industry, to manufacture certain components, you need certain tools and molds. Now, they require huge investment. To invest in the tools, to invest in a mold is by itself a expensive affair. So what the businesses do normally is that when a client approaches them to get certain components manufactured and supplied to that client, they agree to pay additionally a tooling cost to that particular manufacturer. So manufacturer basically receives two kinds of income. One is the tooling cost, another is the actual component that they will manufacture and supply against a consideration. So this was a situation where the client had received an order from a foreign customer. The foreign customer agreed to pay certain amount as a tooling cost and a certain amount for the components that will be manufactured and exported to that customer from time to time. Now the taxpayer had not paid the tax on this tooling cost, assuming that it is a zero rated transaction. Now department took a view during their audit initially is that, look, the amount for which you are getting this consideration is towards the tools and the molds that you have acquired for making those components. Now components will be exported for which you are going to get a separate consideration, but the tools will remain with you. Tools will never be physically sent outside India. So the officer said, look at the definition of export in IGST law. Clause 6 of section 2 of the IGST Act says export means taking goods out of India to a place outside India. Here physically the tools will not be taken outside India. The money that you have received is for these tools only, and therefore you will not get the export benefit. You will not get the benefit of zero rating. GST will apply on this income. So this was what the interaction the taxpayer had with the audit officer. Now when the taxpayer came to us with this particular issue, that what to do? Do we pay this GST which the officer is suggesting on this tooling income? It was running into crores of rupees. Or do we contest the matter? Now when we ask for the agreement, that what is your actual understanding with the client as far as the tooling cost is concerned? So he shared the copy of agreement with us. Now what the agreement demonstrated is that this tooling cost was paid as a condition towards the transaction or a contract to supply the components. So it was part of the same agreement to supply the components, whereby of an additional consideration, this tooling cost was paid. The foreign customer never intended to assume the ownership of the tools. The tools remained property of the Indian manufacturer. The foreign customer only paid this additional consideration to ensure the supply of the components that will be manufactured out of that tools to him. So when we look at this factual aspect, then we examine the law. Now when we examine the law, what we found is this, that if you treat the supply of tools as an independent supply, then the standard of department is perhaps right to say that since tools have not been physically exported, GST would apply. If you treat this additional amount not towards the supply of tools, because tools are never supplied, tools continue to be the property of the manufacturer. If you consider this consideration as an extra amount or an extra consideration paid towards supply of components, components will be physically exported. In that situation, this amount will be considered as the additional amount towards the value of supply of components, and therefore will enjoy the benefit of zero rating. Now, when we look at law, section 15 already provides for this eventuality, where section 15.2 of the valuation dealing with the value of supply says that in case of a value of supply where beyond transaction value something additionally is paid till the delivery of those goods to the customer, then even that amount would be considered as the value of supply of the components. Then we looked at the customs law. What we found, even the customs valuation rule agree with this proposition, that if you are going to export certain components and you are going to get additional lump sum consideration over and above the per unit price, then that additional consideration would be also treated as a value of export of goods, value of exported goods. Then we looked at the law which governs the filing of the shipping bill, because we wanted to find whether shipping bill, because in shipping bill there is no additional column where you can put this lump sum amount. What we found was very interesting. What we found that when we deal with the shipping bill regulation, it does not mandate that this extra consideration should be indicated in the shipping bill that is filed towards the export of goods. Unlike import transaction, in an import transaction, The bill of entry mandates that if some additional consideration is paid by an Indian importer to a foreign supplier, it has to be added for the purpose of levy of custom duty. It is not the situation otherwise when you are exporting the goods, because government does not really care at the time of exports, because there is no export duty generally on goods in question. So with this factual background, with this agreement, we prepared a submission and we put across to that officer saying that, look, you are going on a wrong premise. You are assuming that we have supplied the tools. Factually, we have not supplied the tools. Factually, what we are supplying is components only. This is only an additional consideration that we are getting towards that supply of components. Now, that matter is right now still undergoing. But why I shared this example is to demonstrate that by putting this factual clarity at this stage, at least now the matter will remain only purely a legal dispute, that if such additional consideration is paid towards the export of components, whether the benefit of zero rating should be given to this additional amount or not. If, let us say, had we not put these factual aspects at this stage, the officer would have gone under the presumption that you have supplied the tools, and he would have issued the show cause notice on the basis of that presumption. In that situation, then at the adjudication stage, we will have to then, we might have to then again go back to the facts, dispute that presumption, and lay down the actual facts and ask the adjudicating officer to consider the actual facts. So this would have just made the matters more complex and more complicated. So this is the value addition that I think we can definitely put in suggesting the client where they should settle the cases with the GST audit department, and when they should not settle the audit, and all the principles that I have discussed in last 2 hours. I believe you should keep in mind the jurisdictional issues, the technical issues, issues on merits, because on any issue, when you want to suggest to the client whether they should settle or not settle, all these aspects would become very critical, because this is the real value addition where you can put, where instead of settling, where you find the client should not settle and dispute the case, and ultimately you stand right in your view. Certainly the value addition that you would do, the kind of impact that you will leave in the mind of your client, where you guided him correctly, and ultimately you came out, you succeeded in that particular view, certainly will help you a lot in not only saving money for your client, but also in building a reputation before the client in terms of being an advisor who certainly considers all the facets of a particular case while giving the advice to the client. So with that, I end. If anyone has any questions, I would be happy to take.
I have a query.
Yeah, please.
Just in case if your GSTR 9 or 9C is not filed, then what will be the extended period or the period during which the assessment can happen, number one? And in the same scenario, by when can the department do an audit per se? So let's say it is pertaining to a year of 2017-18, just for an example.
Right. So basically the 5-year or the 3-year, as the case may be. Under 74, it is 5 years. Under section 73, it is 3 years. That time limit to pass an order would apply from the due date of filing of the annual return, in case annual return is not filed. So if, let us say 17-18 due date was somewhere, I think in February, first week of February of 2019, the extended due dates, because in 17-18 being the first year, government granted a lot of extensions, and ultimately it was, I think, in the first week of February 19 that finally the due date was fixed. So it is that time limit that would be considered for calculating the 5 years or 3 years, as the case may be. Now, as far as the departmental audits is concerned, certainly the audit has to happen of the period which legally they are permitted to issue a notice. So let us say for 17-18, the 5-year period is over. Let us say it gets over in 2025. Now in 26, if they come for audit, 2026, they can not ask for 17, 18 data, because in any case, even if they find any discrepancy, they will not be able to issue any show cause notice or adjudicate the show cause notice, because anyway that matter is time barred. So department during their audit can go back only to that extent for which they have legally, they are within their power to issue the notice and adjudicate the notice. For period which is time barred, no audit can be undertaken, because it is a futile exercise. Even after undertaking the audit, anyway department is restricted by law from raising any demand for that time period. It is too early right now, because 17, 18, as I said, that itself will become time bar somewhere in 2025. So it is going to still take more time. But the law applies equally, whether you have filed your annual return or you have not filed your annual return. These timelines are fixed for all. Even if you have not filed the annual return, would not give the department more time to issue the show cause notice or more time to undertake the audit. Timelines remain the same: 3 years from the due date of annual return or 5 years from the due date of annual return.
Thank you.
Members, any more doubts?
Mr. Abhay, this is Ashish.
Yeah.
So one of the major problems what we are actually facing is part period audit. When the department takes the audit, in between period, that is for 6 months or whatever the date of their visit, they want to do audit for the part period also.
Right.
Now, every dealer has a right to rectify their mistake by way of GSTR 9 or amendment to GSTR 1 or 3 in subsequent period. Now, by doing this, there could be a genuine mistake which could be rectified. So the right is being taken away by the way of this audit. And whenever we are objecting or even giving and writing that please restrict the audit only to the end of the financial year, because these things can be rectified subsequently, still department at times are not, 99% department, especially state departments, are not listening, because anyhow what we have understood, central department is taking up audit only till the end of financial year. As of now, they are not taking part period audit. So any way out suggested?
Yeah, of course. See, basically what you can rely on is a CBIC audit manual that categorically states that only audit for that period can be undertaken where the due date of filing of annual return has already expired. So they cannot undertake audit for any year where the due date for filing of the annual return is yet to expire. And there is a legal basis for it, because as you rightly said, annual return is the last opportunity given to the taxpayer to rectify on a self-assessment basis any errors, any mistakes that he might have committed while filing his monthly returns. So that right cannot be circumscribed by department coming before that due date and saying that this error you have committed, there is an intention to evade, and therefore we will not only now recover tax, but also we will recover interest, we will recover penalties, so on and so forth. In income tax, we have this fairly settled law, because in income tax also similar issues used to happen, where they used to conduct search and they used to undertake the assessment, even of that assessment year where the filing of the return was yet to happen, or the due date was yet to be passed. In that situation, Supreme Court time and again has categorically taken a very clear view that as far as the year for which the time limit to file the income tax return has not yet expired, the taxpayer is well within his rights to declare that income, whatever department feels he has evaded, in that return that he is going to file, pay off the taxes and avoid any further consequences. In my opinion, the same ratio should apply in GST also, because it is not different. The fundamental logic, fundamental principle remains the same, that you cannot trample upon the taxpayer's right to file the annual return by initiating the audit before the due date of filing of the annual return. You cannot vitiate that right. If you do, that would not give you the right to impose penalty or impose any penal consequences on the taxpayer. At the most, you can only recover what is otherwise payable by way of a normal proceeding in terms of filing of the annual return, whereby you would have paid probably interest along with the tax based on the provisions of law. Only to that extent you can recover. Beyond that, you cannot recover. So certainly, if they ask for penalty and if you object to it, and if they issue a show cause notice saying that penalty was not paid, And if you bring this fact across on record saying that due date itself had not expired for that time period, certainly I believe the judiciary will not sustain the penalty, the levy of penalty or the adverse consequences that department might have enforced. So that would be
next. Yeah, thank you. And one more thing, with this section 61. Now we are getting section 61 notices for the same period multiple times on a different aspect. One time you will get a notice for 1 versus 3. And after some day for the same period, you will get 1 versus 2A,
right.
3B versus TDS. So what would be your call on this, that once the department has issued section 61 notice on a specific aspect for a specific period, again can they issue a fresh 61 for the same period on some other ground?
See, expressly section does not debar the department from exercising that power simultaneously for the period. It says the officer who comes across a discrepancy while verifying the correctness of the return can exercise that power and issue the notice. So legally, I don't see that you can challenge that part by saying that for the same time period, you cannot successively issue the notice under 61. As I said in my talk, even if the discrepancy remains unresolved, they will have to still follow it up with a show cause notice. At that time, issues will get bunched up, and that show cause notice would have to be adjudicated. So legally, I don't see you can prevent the department from issuing the notice. I think they can do it. Another only thing probably you can do, another aspect that you must consider is that you should keep record of all these notices, because all those issues that they are raising is good for you right now, because the more the issues they raise, the more the other officers from the same department or from other department would be then prohibited from touching upon those issues or from initiating any kind of proceedings vis-a-vis those issues. So that would be the protection that you would certainly get qua the issues that they raise under 61. So apart from these two, I don't see you can challenge the invocation of 61 per se on this basis that you are doing it repeatedly.
And Mr. Abhay, can you throw some light on revision versus appeal? Because on certain aspects, the revision has a very limited scope.
Right.
Whereas if any of the order passes by the departmental officer, if there are any issues, they were going for an appeal. And I remember in one of the cases, latest, I think it's Chhattisgarh High Court, where they have said that even they can take up a revision instead of appeal.
See, under section 108, basically a revision, number one, has to be undertaken by an officer of a superior rank, because the entire basis of revision is to say that they call for the record of a particular proceeding. That is, the superior calls for a record of a particular proceeding undertaken by a subordinate, reviews that record, and based on that review, if he finds that certain tax has escaped assessment, certain turnover has escaped assessment, certain tax has not been paid, or certain credits have been wrongly availed, he can initiate the revision within a time period of 3 years from the date of the passing of that particular order. However, there are law itself expressly provides for certain exceptions where revision cannot be undertaken, and first exception is where the order has been challenged in an appeal. So where the order is already before an appeal, that order cannot be revised. It goes out of the ambit of the powers under 108. So if the order has been challenged either by you as a taxpayer or by the department, then 108 cannot be invoked. In absence of an appeal, 108 can be invoked. Now, the interesting part to consider is that whether 108 can be invoked on the basis of change in opinion. In income tax law, because in VAT law, we had a similar provision. Many states had a similar provision. Now, in VAT law, the language was, however, restricted. The revision, there was a difference between revision and reassessment. Reassessment was a broader in scope. Revision was a narrower in scope. In a sense, saying that reassessment can be undertaken even if the subordinate or even the officer of the same rank had missed assessing something, subject to, of course, the overall time limits given in law. Revision was something where only a fatal mistake or certain fact coming into the knowledge after the passing of that order can only be the basis to undertake revision. A change in opinion cannot be the basis to undertake the revision. So, for example, let us say on an issue of mismatch with 2A, an officer takes a view and decides to drop the case basis that 2A is not the valid form for determining the eligibility of credit. Now, a superior cannot then say, when reviewing this record of proceeding, that no, why you left this issue out? You should have demanded the tax, you should have demanded the credit on the basis of mismatch with 2A. This is clearly a situation of change in opinion, where the fact remains the same. Fact was already on record. The law also remains the same. Only a superior is now changing an opinion. Now, whether that change of opinion can permit revision is something debatable. 108 expressly does not debar it, because 108 says in any situation, if he finds that credit has been erroneously claimed, he can undertake the revision. But I think somewhere courts will have to read down this language and limit the invocation to a situation where either the subordinate has made a fatal error in undertaking that proceeding, or a certain fact has come to the knowledge after the passing of that order by that subordinate. I believe only in those two situations revision should be ideally invoked, not in all the situations. But that is something again which in future only we can say. But certainly an order which has gone into an appeal gets thrown out from the ambit of revision. That is expressly in law.
And final question, can a department issue revised show cause notice?
See, again, very interesting question. One of my slides in the presentation, in fact, covers a lot of decisions on this aspect. Let me explain the key proposition, how the courts have looked at this issue. First and foremost, if let us say a show cause has been issued and there is a mention of a provision of law, but it is erroneous. Let us say the officer made a mistake. He wanted to refer to, let us say, Rule 59 in the context of GSTR 1. By mistake, he quotes Rule 60 and issues a show cause notice. Now, the courts have generally looked at such situation leniently. Courts said that, look, we cannot then say that the show cause notice is invalid merely because he referred to a wrong rule. In essence, the reading of the show cause notice indicates that he wanted to refer to Rule 59. By error, he put that rule as Rule 60, but it will not be fatal to the validity of that notice. So in that situation, if he issues a corrigendum, it is generally upheld by the court, saying that the officer is well within the right to issue a corrigendum and correct this error that he comes across. However, the courts have been very critical of a situation where he has referred substantively to a provision of law, which is not applicable to the facts of that case. In that situation, he cannot then replace a charge that he has made in a show cause notice by altogether inventing a different charge and issuing a corrigendum to that show cause notice, or a supplement or an addendum to that show cause notice. That is not permissible. So in substance, let us say on a mismatch, he is issuing a show cause notice saying that under section 16, you are not eligible for the credit. Now you reply saying that under section 16, it is a very vague show cause notice. Section 16 contains 4 subsections. Which are the subsections which I have violated? The officer has not cared to refer to, and therefore on this ground itself, the show cause notice should not sustain. Now he issues a corrigendum saying that no, by view of section 16, actually I was referring to 16(2) clause C in terms of saying that to the extent of mismatch credit, the suppliers have not paid the tax and therefore the credit is not allowable. Now this will not be permissible because he is replacing the charge altogether. His initial charge was never in the context of 16(2) clause C. Now he is replacing his charge altogether. When we point out this defect, that is impermissible. Courts have clearly said that this is corrigendum is not for this purpose. Once you lay down a charge, apply a law, you cannot law by way of corrigendum. You can issue a second show cause notice, but you cannot change that first show cause notice by issuing a supplement to that show cause notice. Third, let us procedural defect, procedural violation. In a show cause notice, as I was saying, DRC 01, summary of that is required to be electronically served. Rule 142 mandates it. The rule mandates that it has to be served along with the show cause notice. That is the language of that rule. So you point out during the adjudication that, look, you have given me a show cause notice, but you have not electronically served the summary of this show cause notice in DRC 01, and therefore these proceedings are bad in law. You rely on that Madhya Pradesh High Court decision, Akash Garg's case, to fortify your submission. Then what officer does? He goes on the portal, he issues the summary of that DRC01 and again calls for a hearing, saying that, look, in the first hearing you objected that I did not follow the procedure. Now I have followed the procedure. Now I'm giving you one more opportunity to come and make your arguments. Is that valid? No. This is not valid because the law mandated that this was to be issued along with the show cause notice. The law is very settled on this aspect that after personal hearing, show cause notice cannot be modified. Corrigendum also cannot be issued because personal hearing was the opportunity given to the other side to respond to your allegations. You made certain allegations. The other side responded to those allegations. Now, after studying those allegations, you cannot now modify the charge or issue a supplement or corrigendum and change the show cause notice. After personal hearing, the matter is closed. What you wanted to say, you have said. What the taxpayer wanted to say, he has said. Now, the only job left for the adjudicating authority is to pass an order based on the contents of the notice and the contents of the submissions of the taxpayer. He is not within his rights. Neither is the original authority within his rights to issue a corrigendum. Now, certainly, these are the three basic propositions that the courts have till now upheld. Now, let us say you challenge based on this, you succeed. You set aside the show cause notice on any of these three propositions. Department can still issue another show cause notice because 73 or 74 does not debar them to issue a second show cause notice by rectifying all those mistakes that they had committed in the first set of proceedings. However, now the proceedings can never be initiated under 74. Why? Because department was aware about the case under the earlier proceedings. So there again the law is settled. But the Supreme Court has said that in the first round of proceedings, you are aware about the facts of the case. Those proceedings are quashed on technical ground only. Now in the second set of proceedings for the same subject matter, for the same time period, you cannot say that the taxpayer intended to evade because that facts were known to you. And therefore the second set of proceedings has to be always under 73. It can never be under 74. So this is largely how the propositions are in the context of your query as far as the corrigendum or the second show cause is concerned.
So, Abhay, so what about personal hearing is not happened, but reply is filed? Now we are receiving corrigendum.
So, as I said, you will have to study the corrigendum. If the corrigendum is adding another charge,
just now when we are having a session today, just now we received a corrigendum. Initially, they proposed a penalty under section 74. Now right. They send me a corrigendum saying that no, the penalty is not under 74, but now they want to levy penalty only under 122.
So this is not sustainable because here they are changing the charge altogether because we have a separate set of conditions to be followed, separate set of conditions to be met for the impositions of penalty under 74 vis-a-vis 122, various clauses.
Whereas we have already filed the reply, which is not happened. We have already filed the reply.
Right. So this is clearly a defect. This cannot sustain. Now the adjudicating officer has to limit itself to the charge in the initial show cause notice and your reply. You cannot now entertain the new charge of 122 and decide that charge. That is now out of question. In my opinion, and you can refer in my presentation, you will find a lot of decisions where Supreme Courts have said that you cannot modify the show cause notice by introducing a new charge altogether. So you can give this as a support to an additional submission against this corrigendum that you have received.
I mean, one thing, we are referring to section 6 in your presentation initially.
Right.
Now, our understanding regarding section 6 is section 6 debars cross demand. Say a state officer has decided something, a center officer cannot unsettle it. Similarly, center officer has passed an order, state officer cannot unsettle it or question it. But not within the hierarchy of the same. Say central officer has issued me a notice under 61. Now under audit, they want to disturb that because I had submitted a reply. I didn't receive any closure proceedings.
Right. So in this context, the view that we have taken is like this, that if you look at the minutes of the GST Council meeting, the 9th GST Council meeting, where basically they debated a lot into how the administration should function in the context of GST. And what led to section 6 is to avoid multiple proceedings on the same issue qua particular taxpayer. Now, once a particular proceeding have been initiated, either by the officer of the same department or the officer of the other department, those proceedings have to be then taken to a logical end. You cannot then have another set of proceedings, because otherwise, if you think logically, let us say the first officer still pursues the matter. The second officer now also wants to pursue the same matter. Can they issue two show cause notices on the same matter, on the same issue, by the two different commissionerates of the same department or the two different officers of the same commissionerate? Certainly 73 or 74 does not permit them to do it. So one of them has to give away the right. Now, certainly in that situation, what principle do you adopt when out of the two officers, which officer should give up their right or their claim to the proceedings? In that situation, I am of the opinion that principle of section 6 has to equally apply in this situation also. It is all on first come first serve basis. So first a right has been exercised by one officer, then he has to take it to the logical end. Under 61, he has the right to issue a show cause notice subsequently if he disagrees with your reply. So unless so he is the only officer who can really then decide whether he wants to go for 73, 74, or he does not want to go for that. Another officer cannot then jump in and exercise right and initiate the proceeding. So that would be my view. Otherwise, it will lead to multiple litigation, because today the audit officer may issue a notice under 74. It will not prevent the first officer from issuing the notice under 74 against his proceedings that he had initiated earlier under 61. Now, in that situation, we cannot have a case where on the same subject matter you have two show cause notices. That certainly 74 will not allow. And in absence of that, the only way you can harmoniously resolve this controversy is to adopt the principle of 6 vis-a-vis two governments. Same principle should also apply vis-a-vis two officers of the same government.
Thank you. Abhay, can you say that can section 64 be initiated when IBC is being filed against a company? Can filing of an IBC or admission of an IBC application can be the basis for issue of section 64?
No. 64 certainly cannot be accessed. 64 is for the, as I discussed, it is basically a protective assessment.
Yeah, because actually we have came across a case where actually DRC 1A is issued, information has been supplied. Before issue of show cause notice, the company was admitted in NCLT, and in order to file the claim, the officer has passed the order under 64.
Okay, I don't see 64 sustaining, because in this situation, 64 is basically a power to protect their interest of revenue in a sense where they find that the taxpayer is based on a cogent evidence that the taxpayer is undertaking certain actions with an intent to defraud the revenue. So only in that limited set of situations it can be exercised. In fact, the decision of Supreme Court in the case of Radhakishan Industries, the ratio equally applies here, because it has used the same language which is there in the context of provisional attachment, that the reason to believe should be based on a cogent evidence. It cannot be based on suspicion or any assumption or presumption. So equal principle should apply. So merely because a petition in IBC has been filed cannot be the basis for the officer to invoke 64. It cannot. It is not with an intent to defraud the revenue that the petition is getting filed. It is the petition under IBC to really undertake the resolution of that particular taxpayer. So one should challenge the order. But anyway, since practically 64 is there.
The problem is not with our demand. The problem is now the demand, they have raised a huge amount of demand. Under IBC, they received nothing. Even their application was not admitted by RP. Now they want to proceed with 69 and 132.
So
that
in
is
this
the problem.
situation, see, if this demand has been raised and if it has been dealt with by the NCLT, then where is the case of that liability persisting?
No, the RP itself has not admitted the claim itself.
So on what ground did he not admit the claim?
Whatever may be, it would be on technical ground or what may be. Like even the department doesn't file an appeal against it before NCLT.
In that situation, one will have to really demonstrate that if, let us say, the RP had reasons to not admit that demand, and after that the NCLT has also considered that aspect and ultimately ruled not considering that liability, then that liability gets totally extinguished, because under the IBC it has an overriding effect over all other laws, including the GST law. So any demands that gets generated gets all extinguished by way of a passing of an order under the IBC law. So if this is the case, then the demand itself has already gone away. Now, when the demand has gone away, now invoking 69 or 132, the ingredients of those two provisions would not get satisfied in absence of demand. So on that basis, I think only writ application has to be filed if 69, 132 is invoked, challenging all these facets. But in my opinion, if the IBC has already order has been passed, then I don't see any liability.
What is actually the department stand is, what they say, the offense has committed, the liability is not there. Okay, we are not asking you to pay even a penny, but the people who involved in the offense should be punished.
So basically,
that is actually the stand of the department.
I understand. So in IBC, what we normally suggest, that when you file an IBC application, you also should file a simultaneous IBC application for the promoters in question, because as I understand, the immunity given by an order passed under the IBC law, if the order is passed only against the particular entity, will not give any immunity to the personal liability of the promoters of that company, including the liability of arrest or liability of personal punishment. So therefore, there is a concept in IBC also of declaring personal insolvency along with the corporate insolvency. So generally, what we have been suggesting is that in such situation, you should also simultaneously move application for declaring personal insolvency. Once that is also done, so then you get the immunity from all the proceedings, including criminal proceedings. Only that 138, the negotiable instrument, the check bounce liability, that only survives. Other than that, no other liability survives. So that I think even today you can explore that option of going to the NCLT with a personal application.
Sir, there is a separate seminar on this offenses and penalties, sir.
Right. Perhaps then we can maybe conclude.
Yes, sir. You can conclude, sir.
Right. So my end, everything is done, I think.
So excellent deliberations, sir. Because in spite of your busy schedule, at our request that you have given the time, that we are very, very thankful to you, sir. Now I request our Secretary, sir, Anil Benpal, sir, to propose the vote of thanks.
Very good evening to all the members of the Visakhapatnam branch. As we come to the end of the first session of a week-long program on GST, and we have scheduled a number of programs over the entire week. This being the first session, it's my pleasant privilege to thank the speaker of today's evening session of this legal SAPTAH. I would like to sincerely thank Abhay Desai for his wonderful presentation and for his approach in correlating the practical examples with the law. I'm sure all the members would have certainly been benefited with his information and the informative PPT that he's also sharing with us. I thank you, sir, for having spent your time and shared a wonderful knowledge with us and all the members of this branch. So on behalf of the committee members of the Visakhapatnam branch and the members of the branch of Visakhapatnam, I would like to sincerely thank you for your wonderful presentation, sir. Thank you so much.
Thank you, sir. Thank you, sir. It was a pleasure.